Welcome back to the channel, everyone. I know it's been a while since my last video, and I do apologise for that. I've just been really busy, but hopefully now I can get back to making consistent content for you to help you improve your trading. In today's video, I'm going to try and help you eliminate some of your losses by teaching you a rule that I use to make sure that change of character that you're identifying is valid. Obviously, the concept of change of character is subjective, and you might call change of character that someone else doesn't. Maybe, like for example, if you just look in here, this high, if you get that broken, maybe that's a change of character for you. Maybe if you have to wait for this high to be broken for a proper change of character. As long as you're consistent in the way that you define it, then you shouldn't have any problems. Okay, so if you haven't seen my previous video on change of character, I definitely recommend watching that out. It gives you a full strategy that I use, and I'll be giving some examples that use those rules in this video as well. But that's just a good video to watch before this one. I'll go into more detail here. So, but just a small recap. Change of character, if the market's trending downwards, you get a break of structure to the upside, and then continues up. Something like that, for example. Your change of character, most people would say this right here. Here's your change of character. Because the trend is down, bearish, then we change, break of structure, and now the trend is bullish. That's basically what it means. How do you define which point tells you when there's been a change of character? So obviously there's going to be lots of scenarios in the market. But just the textbook way I like to look at it is that a change of character is only valid if, I'll just write this up. Okay, so here's the magic rule. Not really magic, but this is what I use to define a change of character, and I'll explain it in a bit more detail. I don't know if I've explained it very well here. But change of character is valid if the move in the original direction before the change of character caused a break of structure. So I'll go through a few different examples here. So let's say the market's trending upwards. Creating higher high, higher low, higher high, higher low, higher high, higher low, and then you get something like this. Obviously, you can create a strategy around this if you want to. I think the setups will be low probability, just because this like move downwards here hasn't taken out any liquidity, which I'll explain a bit more. Now, while this might look like a change of character has happened here, in this breakdown here, because this point hasn't broken above this high, for me this isn't a valid change of character, and so I wouldn't call it a change of character, and I wouldn't look to trade off of an order block from up here. And so what I'm talking about, a setup that would be valid for me, to be creating higher high, higher low, then it goes higher high, and then takes out that higher low before coming down. And now the reason for that is that up here, above this high, there's still going to be liquidity. And so if you try and take a sell here, there's still going to be a lot of retail traders, just retail theory traders with their buy stops up here, which the institutions are going to look to take out before, not take out, but just fill their orders in this area to push the market downwards if they want to push it downwards. Whereas here, liquidity screen above this high has been grabbed before the push down, which just confirms to me that the institutions have placed sells here, and it just makes the setup higher probability. And obviously you want to take not as little trades as you can, but if you're over trading, then that's never a good thing, and you're more likely to do that if you're trading these setups as well as these setups, rather than just trading these setups. You might as well trade the highest probability setups, even if you're not trading as many, because trust me, you'll be more profitable in the long term. Now with this setup, there is one grey area, I guess you could say, and this is up to you. I guess I still trade it, but it's up to you whether you want to or not. But let's say the market, I'll use the same uptrend. So it created a break of structure, but then what it does is it comes down and then does this. So it doesn't break this high up here, but it did break this high here. So for me, it's still valid because it's still taking out liquidity. And what you might find is that they would actually a higher time frame order block here that was filled there on that retracement, and then there was more liquidity to be taken out that the institution saw, so they took that out before pushing the market down, and then you can look to get in from here. Obviously, if you want to stick to these setups, then that's fine. Maybe try and learn these first and just analyze these on the charts if you see it. Yeah, this is kind of the textbook setup, so if you want to take a note of that, then that's always good. But again, just some live chart examples in a minute. Okay, so I'll just delete all of this. And then we'll go on to Euro USD. These are trades I've seen in the past. I haven't really been able to be on the markets intraday last week, but if you just watch my change character video, then you'll know that these rules did well ticked, and you could have got into any of these trades. So if you have a look at the markets here, it's Asian manipulation that I'm looking at with change character, 25th of August, quite recent. So you can see the market's trending upwards, high highs and high lows. Now what you get here, so you get high high, higher low, higher high, higher low, higher high, and then this high low is broken. So if I just draw it, you can't really see it, but what you can see is that there's a high low here which caused the break of structure before this low was taken out, and so it fits in with the rules that I had, about having to have a break of structure to the upside. Similar. Obviously, no chart is going to be perfect, but to me this is pretty clear, pretty clean setup that you could have got in it. Similar to here, up, down, break this high before breaking the last low. Then you get on a retracement, carry the markets down to the Asian low. Very nice trade. Okay, so I'm just going to replay the charts, and you can come along with me as I see what you could do live. Obviously, I have already seen what's happened, but this is what would happen if you're watching it live. You created high, 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 low, higher, high, higher, low, new high, high. So we're waiting for this low to be broken. You can set limits, set like an alert to let you know if you can't watch it constantly. And then, okay, so it's been broken here. So then what you can do is mark up the last bullish candle before the bearish move, and it was engulfed, which is nice. It shows a lot of volume came in. You can even put your stop loss above there or above here, depending on your strategy and what you're comfortable with. If you'd rather have high win rate, lower risk reward, do something like this. If you'd rather be a bit more risky but higher reward, do something like that. And then what you can do, just set your limits at the low of that here, which is about there. Stop loss above there, target the Asian low, and a nice almost 1 to 6 risk reward in one day. Obviously they're not all going to win. I don't want to try and pretend that every trade will win. But there's not really much point showing losing trades. I mean, maybe I'll get a couple, but this is a very nice textbook setup that you could have got in on. Lovely tap for wick rejection. What's this called? Like a hammer, bearish, bullish hammer. I'm not sure, but yeah, wick rejection into your zone for strong push down. So then something else you could look at. Break of structure to the downside here. If you did miss your first entry, or if re-entries are something you do, you could be looking at this zone here. I don't think it gets triggered, but no, almost. But then your original target does get smashed just before New York opens, which is always nice, just in case there's a New York reversal. But yeah, very nice trade. Something I will be looking into in my next video, well, not looking into, but just telling you about, is the fact why these trades sometimes miss. Because you might see it quite often that price comes, not quite often, but just sometimes, price comes close to your POI before taking off in your original direction. You don't know why your limits didn't get triggered, and it's just a trade that you feel annoyed that you missed out on. Okay, now currently, I'm in a long trade on Euro USD. If you are in the Discord, you know that. But here's a setup that would be an invalid change character for me. as you can see, price making higher highs, higher lows, high high, higher low, higher high, higher low, and then a lower high before lower low. So this setup is one of the invalid ones that I mentioned. If I just draw the line bit. I'll do that one. So no liquidity was grabbed up here. There's still going to be some liquidity resting above here. Some buy side liquidity. And it wasn't grabbed before the push down. So for me, not enough orders were placed to the markets here by the institutions to actually signal that there's going to be a strong push down. Similar to this setup here, the texture setup that I mentioned earlier. And yeah, that's why I'm still bullish on EURUSD. Tomorrow's, or whenever it comes out, video on order flow will explain how I entered this trade. But if you want to see the trade and a possible re-entry, then just join the Discord. But that's going to be it for today's video. I hope you enjoyed and I hope you learned something. If you did, please leave a like and subscribe. And yeah, join the Discord down below. And yeah, follow me on Instagram. That'd be much appreciated. Thanks.